Hello everyone and welcome to the BKL 2023 Spring Budget Summary. Well, no huge surprises today, but a few important changes, so I'm delighted to be joined by Helena Kangzula to talk through the budget with you. So Helena, let's start with some of the key changes, and one that was heavily trialled where the Chancellor went a little bit further than we had anticipated: pension changes. What happened there?
Well, as widely reported in the newspaper, there were some significant changes to do with pensions. We were expecting the lifetime allowance to increase to 1.8 million from around, let's call it 1 million. Actually, that lifetime allowance has been scrapped. So whereas before the maximum that you could basically contribute into your pension scheme could grow to a level of about 1.07 million, that's now gone.
Okay.
And that's to encourage apparently people to go back to work who have retired early. The annual allowance, so the amount you can contribute each year, has increased from 40,000 to 60,000. So we need to think about how that applies for those who haven't used up their annual allowances in previous periods. Okay, the maximum that you can contribute in each tax year has also increased from 40,000 to 60,000. That allowance of 60,000 can be tapered for very high earners. However, the minimum amount has increased under these rules from £4,000 to £10,000. So again, some good news there. But then finally, the maximum that you can take out of your pension pot as a lump sum, tax-free, is staying the same. So that will be around the £268,000 mark.
Okay, thanks Helena. Let's move on now to capital allowances. Here we're seeing the end of the super deduction. That 130% deduction for companies comes to an end on 1 April of this year. What's the Chancellor said to replace that?
Yes, that's right, Tony. We've now got the 100% rate for assets in the main pool, 50% rate for special rate pool assets. These rates relate to companies only, but the amounts are uncapped.
So before you all go out and rush to take advantage of the 130% super deduction rate, we should point out in reality it makes very little difference, because you'll be getting 100% relief under this new first year allowance regime that the Chancellor announced today at 25%, as opposed to the 130% relief at 19%. So little financial difference. And we should also mention, for those businesses that don't qualify for this new 100% relief, non-corporates, there will still be the annual investment allowance that provides 100% write-off. That is capped at £1 million and is now a permanent measure.
Okay, well, those were the two main headline grabbers. Obviously, the Chancellor talked a lot about incentivising business and innovation. What about R&D? Did you see many changes there?
Yeah, the R&D regime has been changing for a number of years. He previously announced the cutback in the main R&D tax credit rate for 10% to 10% for small companies. We do also have the inclusion now of cloud computing costs taking effect from 1 April this year. So some good news there. It's now also been confirmed that a new digital format by which we'll need to submit all R&D claims will take effect from 1 August of this year. So this is part of HMRC's drive to take a much tougher approach to R&D claims generally, albeit there's been no change to the definition of what we mean by R&D for these purposes at all. On a positive note, it's also been announced that the restriction on R&D qualifying costs for work done overseas, that's to be pushed back from 1 April of this year to 1 April next year. The reason? Well, it's part of the ongoing consultation looking at aligning the two separate R&D regimes for small and medium-sized companies and large companies. And finally, the Chancellor also announced that for intensive R&D companies, those are companies that broadly spend more than 40% of their total expenditure on R&D costs, their tax credit is to go back from the now 10% rate back up to the 14.5% rate we had last April.
So the government are obviously focused on looking at the creative arts space. It's a very important part of the economy. Could you maybe just talk us through some of the changes we're likely to see there?
Yeah, not too much to say here. Again, it's actually quite positive. The Chancellor announced that the extension in the higher rates for theatre tax credits, for orchestral tax credits, etc., they're to stay at the enhanced rates for another 2 years. So that's 45% and 50% respectively. I would add, though, that it was announced that the costs on which you can claim relief are now to be restricted only to UK costs. Previously, you could claim for also expenditure incurred in the EA. So that's another Brexit bonus for us. In a similar vein, it was also squirreled away in some of the press releases that reliefs for charities are also now to be restricted to charities incorporated in the UK. So companies, for example, will no longer be able to claim relief where they make donations to charities located elsewhere in the EEA. Some of those changes will take place immediately, some will be transitioned until 1 April 2024. So those are the creative tax credits. Helen, there are also a couple of announcements about investment zones.
The Chancellor announced 12 new investment zones which are going to benefit from certain tax incentives, including those relating to SDLT, employment taxes and a more favourable capital allowance regime. So watch this space.
Okay, and as far as changes go, that was pretty much it. There wasn't the normal plethora of anti-avoidance rules, some minor changes targeting promoters of tax schemes, and that was about it. However, there were also a number of significant changes that had previously been announced that I think we should revisit given they take effect from 1 April. Helena, what about rates and allowances generally?
Well, there's not really been any changes there. So some of the allowances have been frozen, which in times of high inflation is obviously quite difficult because it means that more people potentially are dragged into a tax-paying position or into a higher tax bracket.
There is also the increase in corporation tax rate that's going up now to 25% from the current 19%. Quite an increase and something that we were hoping the Chancellor might row back on a bit. Albeit we do have the small companies rate of 19% that applies to profits up to 50,000 and a tapering between 50,000 and 250,000.
So as expected, the level of dividends which can be received by any taxpayer tax-free is going to reduce. So it was previously £2,000, it's going to go down to £1,000. The annual exempt amount for capital gains tax is going to decrease. So that's decreasing from £12,300 this tax year to £6,000 next tax year.
And those limits are to be halved again from April next year.
That's right.
We also know that the higher rate of income tax, the so-called additional rate, will kick in not from 150,000 but from £125,140 from this April. It's a rather arbitrary limit, but it links to the tapering of the personal allowance, whereby your personal allowance is clawed back once your income is in excess of £100,000.
One measure mentioned in the previous statement made at the end of last year relates to share-for-share exchanges where an offshore company is used. And this measure really affects non-domiciled individuals. Now, the offshore company will be treated as a UK sighter, so that may affect some of the planning that non-doms traditionally enter into.
All right, but there was also some good news previously announced. Let's start with CSOPs, Helena.
The government are really keen on encouraging employee share ownership. The maximum amount of shares over which options can be granted to employees has now increased the limit. So that's gone from £30,000 to £60,000, which I think is good news.
Well, here the Seed Enterprise Investment Scheme has been significantly strengthened. Previously, a company could only raise £150,000. That's now gone up to £250,000. Likewise, an individual investor had an annual limit of £100,000 they could invest under the regime. That's gone up to £200,000. What companies can you invest in? Well, the gross asset limit has increased from £200,000 to £300,000. And whereas previously these businesses could only have been trading for 2 years, you can now claim Seed EIS investment relief for businesses that have been around for up to 3 years.
And some good news for divorcing couples. The period over which nil gain, nil loss transfers can be made is going to be increased to 3 years.
Okay, and finally, Helena, what wasn't mentioned in the budget?
No changes to the capital gains tax rates were announced. nor were there any consultations into potentially changing the rules. Inheritance tax has been left alone. Again, no changes there. I know some commentators think that it's ripe for reform, but nothing for this tax year. SDLT and stamp duty were barely mentioned, except in the context of, say, the enterprise zones. The property sector, there was nothing to write home about there, albeit that the capital allowance changes were potentially welcome.
And there you have it. So not really a blockbuster budget, but it is what it is. And if you need any further advice on any of the topics that Helen and I have discussed today, please do speak to your normal BKL contact. Thanks.